Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Lemonade stock got a bump recently when they announced that Oregon was the 5th state that all of their insurance products were available in. But even with that bump, the stock is still down like 80% below the IPO price, continues to burn money, and is not doing everything as well as investors think that it should. But it's making progress. Like I said, is now time finally to buy Lemonade stock? I'm Jason Hall. This is The Smattering. Jeff Santor and I are going to talk about it. Hey, Jeff, let's talk about what's going on with Lemonade that they're doing right.
So there's a lot of things that are going right with the company. So just to start at the top line, revenue growth is either in the high double digits or triple digits pretty much every quarter. This last quarter, no exception. It was up 116%. They're still losing money on a GAAP basis every quarter. It's a net loss every quarter, but that is getting better slightly every quarter. So it's trending in the right direction. And all of their customer growth numbers are really good. Just as an example, customer growth in the last quarter, 26%. In-force premium and gross earned premium were near 70%. The premium per customer was up 30%. So a lot of the top line, some of the profitability numbers, their expenses are starting to come in line. I mean, they're still massive, but they're getting better each quarter. Customer growth is strong. In-force premium is strong. All of those things are looking good. But as an insurance company, they have to be able to write insurance in a way that doesn't lose too much money. And I think that's where investors are getting caught up.
Yeah, I think you hit it right. So again, I'm going to just circle back to the things that you said. Good. There's no doubt that people love Lemonade. And as Lemonade offers more products in every state, the numbers look better. And their 10K for last year, they reported that in Illinois, the state that had all of their products available the earliest, their retention rate was like mid 90% versus high 80s in other states. So it's clear that that bundling concept works really, really well. So we're seeing that. Their AI is great for approving a policy and pricing it, and great for when you file a claim, like making a decision about that claim really quickly and paying you if the claim is approved. But like you said, is insurance companies have got to be actually good at underwriting insurance. And that's the one thing we've seen is like the gross loss ratio continues to be far higher than the company's goal. And we've seen it trend down, Jeff, but it still has a significant way to go.
Yeah, so just to put some numbers on it, the gross loss ratio in the last quarter was 89%. Now a year ago, it was 96%. But back when they
That's
first
a
came
long way from the mid 70% that management, that's their target.
Right. And it was in that mid 70s range when they first came on the public markets back in 2020. So it got worse and now it's trending back better. And I think you're right. Some of that bundling is probably going to help.
So here's what management told us at the kind of the end of the 2022. So early this year when they had their call to cover their fiscal year results and talk about the progress they made, is they said that a lot of the new policies they've written, they're anticipating that they're going to see the loss ratios fall within the range as their AI gets better and their underwriting models improve. I think investors should be really mindful about not rushing into this. I will admit one of my mistakes with Lemonade was I rushed too quickly into it, falling in love with the customer story and not tracking with the underwriting story. Because at the end of the day, if you can't write insurance profitably, it doesn't matter how much your customers love you. So they have to show that they can fix that. So I don't think there's anything wrong with maybe taking a small position to start, but I think this is a perfect business that you follow and look to dollar cost your average your position into as the company demonstrates that it's worth buying more, because so far they haven't proven that they can actually be a good insurance company. They can be a good company, great for customers, but not really good for the owners of the business.